What's up everyone? Welcome back to another video. In this video I'm going to be covering why it's important to know your go-to setups and how to develop your playbook. I'm going to be explaining why diversifying your setups and developing your playbook will give you more opportunities in the market. So let's get right to it. Your setups and your playbook is a book consisting of your favorite types of trades to take in the market. Your setups that you're taking don't have to be your favorite, but as you develop as a trader, you're going to figure out which types of trades you like to take the most and which types of trades are your least favorites to take. But the important thing here to note is that you have them in your playbook and you're able to identify which setups in the market work for you and how you trade as a trader. So in this video, I'm going to be covering some of my favorite go-to setups in the market and what I have in my playbook. And I'm going to be showing you guys a couple of live trade examples. So I'm going to be covering a technical pattern playbook setup, and this is on DDOG. On Tuesday, it was a triangle breakout. Let me go to Tuesday. It was here. So to give you some background context on DDOG, DDOG had a strong news catalyst last, I believe, was this Tuesday or Wednesday? Wednesday. Last week on Wednesday, they had a news catalyst with Microsoft, I believe. So DDOG rallied to all-time highs and eventually started to consolidate around here. And I took a technical pattern trade on DDOG on Tuesday. So let's drill into Tuesday and I'm going to show you guys what happened. So DDOG wasn't on my watch. It was in my watch list, but it wasn't my primary watch on Tuesday. But on the 5-minute time frame, I identified how tightly DDOG was consolidating in between 107 and 106. So I identified this, and one thing I want to mention is once you train your eyes to see these types of technical patterns, they just stand out at you automatically. So essentially I had seen this because all this wasn't here yet. All this price action wasn't here yet. So I had seen this. Let me go back one more candle. This is what I had seen on DDOG. And if you see something like this, it should be on high alert for you because usually stocks don't consolidate this tightly. So I drilled, this was on a 5-minute time frame, so DDOG was on high alert for me. So I drilled down to a 1-minute time frame and I saw this clean triangle pattern for me. So you want to connect the wick highs and the wick lows. And due to um, previous history on DDOG with the news catalyst, I was already long biased. So I was expecting this triangle to break to the upside. So my entry on DDOG for triangles was here, the break of prior pivot high. So prior pivot high was this wick here. So on triangles, when you're trying to play the breakout, as it starts to consolidate tightly, once the breakout is about to happen, you want to make sure that you're getting in as close to the breakout of prior pivot high. So prior pivot high entry, which was here. Your stop in my rules, it might be a little different for you guys based on risk tolerance and a lot of other factors, but stop for me is prior pivot low, which is here. So, and you guys can see what happened after D-Dog broke the triangle, completely rallied for a good one, two, three, 4 candles. And if you're playing scalping options, this is easily a 40-50% move. So this was a really good trade, and it was based off a playbook setup of a technical pattern triangle. And keep in mind that there are a ton of technical patterns that you guys can learn and train your eyes to see. Some of the more relevant ones are triangles and bull flags. Those are some of the patterns that you guys are going to be seeing most often in the market and on lower time frames. One thing to keep in mind with technical patterns is the lower the time frame, the more likely it is to get faked out, and um, the higher the time frame, the more momentum the move is going to have after the stock breaks out. But keep in mind with technical patterns too, and this is I'll go in depth with this on another video, but with technical patterns, there's a saying in the market where the saying is if it's too good to be true, it probably is. Meaning if a technical pattern is so obvious in the market, market makers will purposely uh, try to fake as many traders out as possible before the real move happens. So I'm not going to go in depth with that right now. I'll explain that for a later video, but just keep that in mind. So this was an easy 40-50% move on D-Dog based off a triangle breakout. Another trade I want to cover are opening drives, and my example will be Netflix. Today on um, October 7th. So I believe Netflix had an upgrade during after hours and pre-market. So I was long biased on Netflix. So this was 5 minute pulled up and 1 minute. So in my criteria for opening drives, and this is one thing you guys are gonna develop as a trader. You guys are gonna uh, you guys are gonna become accustomed to the criteria that suits you the best for each type of your go-to setups. So one of my go-to setups in this example is an opening drive. And in my criteria for opening drives, I like for the stock to consolidate heavily during pre-market on good news before the rally occurs. So for example, it didn't Netflix didn't do a tight consolidation here, but what I'm talking about is where price consolidates heavily within a tight range and eventually shoots up opening bell. But as you guys can see here on Netflix, it slowly grinded higher during pre-market, and once opening bell hit, it rallied. So you guys have to keep in mind that all your criteria won't be met to the T. So you guys just have to take certain precautions when you guys enter your positions. So let's break down this trade. So one thing, so Netflix was on high watch for me this morning. One thing I loved about Netflix at the open was that it dipped down, trapping these short sellers, and price was stalled in this little range here. So this is pre-market high, and you guys can see this little base that formed during pre-market. So here's a pivot high. We kind of dipped above. We were able to break this high, this little resistance, and now it became support. So if you draw this here, this is what I'm looking at. This is support. Now, since we broke above it, and you can see how price is holding it, respecting the support. And so price dipped down nearly to support. We held support, and we buyer stepped in, pushing price up to pre-market high. Let me change that. Buyers pushed up price to pre-market high. So in an opening drive play, you have to realize that you have to be quick with your executions. So once you see price cracking above pre-market high, in like I had mentioned, My criteria is whenever I enter a position based on my risk tolerance, my stop is always going to be um, prior prior pivot low. What this is prior pivot low. So I entered Netflix here at the break of pre-market high, and price rallied. So you guys can see this 3 bar play that formed. This can be another type of go-to setup. Once you're able to identify 3 and 4 bar plays, you you can see that this um, 1 minute 3 bar play worked out perfectly. And if you guys watch my previous videos on supply and demand, you can see that demand was formed here. You can see that demand was formed here based on how fast the move happened. So Netflix was big money and institutions were trying to get into Netflix on this opening drive. Typically, institutions and big money aren't buying once once they're buying into pullbacks because they're not trying to pay jacked prices or jacked premiums as the price is moving higher. So they're big money and institutions are hopping into these types of plays on pullbacks. So you can see on the 1 minute time frame, price pulled back here. So this is where big money and institutions are getting in. So they're setting their buy orders here. But price moved so quick out of this little pullback that their orders weren't there were still unfilled big money and institutional orders sitting left here. So demand was formed based on how quick this move happened. So price rallied. We eventually had a pullback into where all the institutions and big money orders were left unfilled. And you guys can see what happened after on a bigger little time frame, 5 minute. We respected that demand and we rallied up to all-time highs. Or not, I don't think all-time highs. I'm sorry. Yeah, not all-time highs. We just made a high a day. So another playbook setup that I really like taking is supply and demand scalping and supply and demand bounces. So once you had identified this 1 minute demand, it would have been on watch for the rest of the day. And once price came back into it, once price starts to revert out of this demand, you take the long with stop being at the low. You can either make it based on the retracement into the zone, you can either make it your stop at the low of the demand zone or the low of the pivot. And you guys can see this would have been a fantastic move up to high of day. Or we eventually cracked high of day, rallying up to 536.50. So this would have been a really good move. I didn't take this trade because I was already done trading for the day. But if I would have seen this, this is a clean cut play. I probably would have taken this if I had seen it real time. I just took the opening drive play. So another example I want to cover is news plays. As options traders, if we're playing directional movement, if we're just playing naked calls or puts, then for we're looking for the most momentum we can find. So that being said, our one of your go-to you want to try to find the most momentum. So that being said, you want to try to look for setups that allow for high momentum. One of those setups can be news catalyst plays. So this is a trade I took on BA. BA on Tuesday had news, and you can see what happened. So news hit around 8:10. I didn't catch this whole move, but I did catch a good portion of it. So the thing with news catalyst is you don't know when news is gonna hit. So that's why you gotta be present at your screen, but you gotta be disciplined enough not to just hop in plays because you feel like it. You have to know your go-to setups and you have to know when to hop into a trade. And especially on news catalyst plays, you have to be quick. So you guys can see what happened here. News hit, price dropped quickly. This is high momentum. I think contracts doubled here. I caught a couple candles. I think I caught like 3 candles. I didn't hold for this whole move. But as you develop as a trader, you have to kind of tweak your criteria to see how you can catch the most of the meat of moves. Obviously, not every single time you're going to be able to catch the whole move, so you have to set your criteria in a way which allows you to catch most of the move. So this is something I'm currently working on, and it just so one thing you can do is scale. And so for example, you can hit once news hits, you can scale in 5 contracts. Once once price momentum is moving in your favor, once you catch a couple candles, scale out 3 contracts. Next couple candles, scale out another 1 contract. You're out 4 contracts. You've already caught a meat of this move. And now once you see the first couple green candles coming in, you scale out your full position. And you've essentially caught the whole meat of the move. So this is a way to let winners run essentially by scaling in. But this is something that comes with experience, so you guys are going to have to set your criteria on how you want to scale your positions, scale in and scale out. Another news play on Tuesday as well was Apple. Apple released their event. So on this was Tuesday. Apple had released that they had a special event coming, I believe, October 13th. Let me remove these drawings. So news dropped around here. You guys can see what happened. So I entered Apple probably around here, and I caught a good chunk of this move, and I probably took profits around here. So this was I think I believe I closed Apple for approximately about 30%. So these are the types of intraday movements that you guys want to be catching if you're playing options directionally. You guys want to be looking for those high momentum trades which allow for low risk and high probability trades, allowing for 2, 3, 4 to 1 trades. And then another trade I want to cover is TTM squeeze trades. So TTM squeeze is essentially an indicator that allows us to see when a stock is in heavy consolidation. So CRM was consolidating heavily, I believe, on the daily. Yep, daily, 4 hour, 2 hour, and a couple of other smaller time frames. So I had identified this and I was looking for an entry. So what I was looking at on CRM was this. So you guys can see right here, TTM Squeeze Pro. The red dots and the black dots was indicating that CRM was in a tight consolidation. This was the box. This was the consolidation zone. So this is one of the first things you guys want to do when identifying your TTM squeeze plays. You want to identify the consolidation zone. So I was long biased on TTM squeeze or on CRM due to this little rally here, and then we get the consolidation. Now I was expecting for another rally to continue, for another push higher. That being said, I didn't want to enter when the at the break of the box because premiums will have already been jacked here and I will be overpaying for premiums. So I looked at pre-market to see if there was a range, and CRM doesn't do a lot of volume during pre-market, but I did identify a little range during pre-market, which was here, this little range here, from 253 to 252. So I made a game plan and I told myself, okay, I'm expecting CRM to break out of this squeeze. Or if it doesn't break out today, I want to get a really good position in CRM and with a tight risk to reward. So if CRM stalls a little bit at open, I still have a good entry and I'm not overpaying for premium once it does have a spike up. So you guys can see that CRM broke 253 at open. So I had entered my position literally at market open at 6:30 a.m. and I just held because price wasn't coming back down to my stop level of 252. So, and I took profits around here, around 650 for about a 40% gain from my entry point of 630. Looking back at it now, hindsight, obviously, if I would have held up until high a day, contracts literally doubled. Yeah, literally doubled. They went from I paid contracts here at 260. They were the I believe they were the yeah, 255 calls. I paid $2 and 60 cents for them here, and they literally went to about $6 all the way at the highs. So looking back at this now, I didn't play my entry point here was A plus. I give myself a grade of an A plus on the entry. I had perfect execution on the entry, but my only bad part was that I exited too early. This was due to the fact that I had caught the Netflix opening drive play and I had already hit my daily goal. So with that being said, I didn't want to give up any more profits on my day from this CRM play. So that kind of messed with me mentally and I exited my position here for about a 40% gain. But if I would have held all day, it would have probably been um, about 100% or 200% move. And I expect CRM to continue its momentum in the following days. So this is another example of a go-to playbook setup, and this is identifying how to enter a TTM squeeze tight consolidation before the move actually happens. So I hope you guys learned a little bit about um, identifying setups. And as you guys become more experienced as a trader, you guys will identify which plays feel comfortable to you. And you guys will start to fine tune your go-to setups and fine tune your playbook to see which which setups you are taking the most and which are the most profitable to you. In my case, another example are pullback trades. In me personally as a trader, I would play opening drives any day other than pullback trades because on opening drives you're hitting high momentum, but on pullbacks, often you don't really know if the momentum is going to continue or if it's going to make like a double top and just fail. So that's why I like playing the momentum better of opening drives, but I still have pullbacks in my playbook because they allow you to get in um, on high volume names at a discount. So I'll be covering more playbook setups in future videos, and I hope you guys learned a little from this YouTube video. I am trying to make my YouTube videos a little bit shorter. Um, like the video, subscribe, and let me know in the comments what you guys want to see more of in future videos. All right, thank you guys. Have a good night.